Here's a detailed overview of Warren Buffett's life and history, capturing the major milestones and events of his remarkable journey to becoming one of the most successful investors in history. Early life and influences. Warren Edward Buffett was born on August 30th, 1930, in Omaha, Nebraska, to Howard and Layla Buffett. Howard, a stockbroker and U.S. congressman, had a significant influence on Warren's early interest in finance. By the time Warren was 6, he showed an entrepreneurial spirit, buying 6 packs of Coca-Cola for 25 cents and selling them individually for a 5-cent profit per bottle. At the age of 11, Buffett purchased his first stock, Citi Service Preferred, at $38 per share. When the price dropped to $27, he held on and eventually sold it at $40, only to see it rise to $200 later. This experience taught him 2 lifelong lessons: the importance of patience and the dangers of acting on emotion. Buffett's fascination with numbers and business persisted throughout his childhood. He read books about investing, including 1,000 Ways to Make $1,000, which inspired him to pursue wealth-building ventures such as delivering newspapers and selling chewing gum and magazines. Education and mentorship. Buffett graduated from Woodrow Wilson High School in 1947. He initially enrolled at the Wharton School at the University of Pennsylvania, but transferred to the University of Nebraska-Lincoln, where he graduated with a degree in business administration at the age of 19. Buffett applied to Harvard Business School, but was rejected. Undeterred, he enrolled at Columbia Business School, where he studied under Benjamin Graham, a legendary investor and the author of The Intelligent Investor. Graham's principles of value investing, buying stocks undervalued by the market and holding them long-term, profoundly shaped Buffett's investment philosophy. After graduating in 1951, Buffett worked briefly at his father's brokerage firm before landing a job at Graham Newman Corp., Benjamin Graham's investment partnership. There, he honed his analytical skills and gained a deep understanding of identifying undervalued companies. Building his investment empire. In 1956, Buffett returned to Omaha and started his own investment partnership, Buffett Partnership Ltd., with a starting capital of $105,000 from family and friends. Over the next 13 years, Buffett grew the partnership's assets exponentially, averaging annual returns of over 20%. Buffett's investment approach focused on undervalued companies with strong fundamentals. He famously identified value in struggling businesses that others overlooked, often taking an active role in improving their operations. In 1962, Buffett dissolved his partnerships and began investing in a Massachusetts textile manufacturing company called Berkshire Hathaway. Although the textile business was declining, Buffett saw potential in using the company as an investment vehicle. Over time, he transformed Berkshire Hathaway into a diversified conglomerate with investments spanning insurance, railroads, utilities, and consumer goods. The rise of Berkshire Hathaway. Under Buffett's leadership, Berkshire Hathaway became synonymous with his unique investment strategy. One of his key moves was acquiring insurance companies, starting with National Indemnity in 1967. Insurance businesses provided a steady stream of cash, or float, which Buffett reinvested into high-performing stocks and businesses. Buffett's approach was also characterized by buying and holding quality companies for the long term. Some of his most famous investments include Coca-Cola. In 1988, Buffett began buying shares in Coca-Cola, eventually becoming the company's largest shareholder. His investment exemplified his belief in strong brands with enduring consumer demand. American Express. Buffett invested in American Express during a financial crisis in the 1960s, a decision that paid off handsomely in the long run. Apple. Though initially hesitant about tech stocks, Buffett made a major investment in Apple in 2016, calling it one of Berkshire's 4 pillars. Buffett's philosophy emphasized buying companies with strong management, durable competitive advantages, and predictable earnings. His investments were guided by a combination of discipline, patience, and an unwavering focus on long-term value. The Oracle of Omaha. As Buffett's success grew, so did his reputation as the Oracle of Omaha. His annual letters to Berkshire Hathaway shareholders became legendary for their clarity, wisdom, and humor. offering insights into his investment strategies and views on the economy. Buffett also cultivated a lifestyle of simplicity and humility. Despite his immense wealth, he continued living in the modest Omaha home he purchased in 1958 and maintained a frugal personal life. Philanthropy and legacy. In 2006, Buffett announced his decision to donate the majority of his wealth to philanthropy, primarily through the Bill and Melinda Gates Foundation. This marked the beginning of a new chapter in his life, aligning with his belief in giving back to society. His philanthropic commitment is part of the Giving Pledge, a campaign he co-founded with Bill Gates, encouraging billionaires to dedicate most of their wealth to charitable causes. Buffett's charitable contributions are among the largest in history. By 2023, he had donated over $50 billion to causes including global health, education, and poverty alleviation. Lessons from Warren Buffett. Buffett's life offers valuable lessons for investors and entrepreneurs alike. 1. Invest in what you understand. Buffett avoids industries he doesn't fully understand, sticking to businesses with clear, predictable cash flows. 2. Patience pays. His ability to wait for the right opportunities and hold investments for decades is central to his success. 3. Live simply. Buffett's frugality underscores his belief that wealth should be a means to freedom, not excess. 4. Focus on long-term value. He prioritizes long-term growth over short-term gains, often ignoring market noise. Current status. As of 2025, Warren Buffett remains the chairman and CEO of Berkshire Hathaway, though he has begun planning for the company's succession. His trusted partner, Charlie Munger, has played a critical role in shaping Berkshire's culture and investments. Despite stepping back from day-to-day management, Buffett's influence on the investment world endures. His timeless principles continue to guide countless investors, making him a revered figure in finance. Warren Buffett's journey from a young boy selling soda to one of the wealthiest and most admired individuals in history is a testament to the power of discipline, curiosity, and a commitment to lifelong learning. His legacy as an investor, philanthropist, and role model will undoubtedly endure for generations to come,